What's going on, everybody? Let's talk about SPYT for retirement. SPYT, the Defiance Fund. We're going to compare it to some ETFs in the same space. We're going to look at its charts. We're going to just do a lot of fun comparisons and see if SPYT is worthy, in my mind anyway, and whatever that's worth to you, of a long hold or retirement position for me, and just kind of how I research stuff myself and decide if I want to get it. Because I'm looking for something when we start correcting or crashing, whenever that day comes, of things to get into. And so SPYT has come across my radar, and I've been doing some research and been watching it. So let's get into it. Do you own SPYT? Let me know what you think of it thus far. So on a preliminary look here, since its inception and its share price, it's down 8% all time. So obviously with the market ripping and its share price declining, that would, be a first red flag, I would think, when you see this. Over the past year, it's down 7%. Meanwhile, SPY is not its underlying, but it's close enough to its underlying, is up 16%. So we're definitely lacking some growth here, but does it make it up in distributions or whatever? Let's find out. So the S&P, SPX, typically averages about 10% per year. And of course, there's down years and up years, but this year, we're up 13% in SPX. So there's that. But yeah, SPX, SPY, both of them return about 10%, okay? And so if we want to just get out the gate here and compare SPYT to SPY, even though it's not its underlying, like I said, it's close enough. It's about 5% off. Total return 14.28 versus 1939 for a full calendar year. So SPY itself is beating SPYT, but that's to be expected, I would think, with any kind of covered call fund or dividend ETF fund. And so nothing too alarming there. I think that's normal. IVV is its basic underlying, which is essentially, it's just like SPY. IVV is, okay? Their dividend history is right here for SPYT, and you can see fairly consistent in that 30-cent range. It has had some dips, as you can see there, during the corrective measure, April and May, from 29 to 28, but since that time has kind of crawled back. Now, it's never, since the correction, it hasn't reached its highs like it did in December, November, and October and September of last year. It's not up to the 33-cent mark. And you can see that here. We can see that the distributions have gone down over time. Not nearly as dramatically or as a fall as a lot of other funds out there. But there's a little bit of growth. I mean, when you dip by, I should say, there is some growth with the distributions. You can see it got down here to 28, and now it's up here to 32. So as the price increases, the distributions increase. That's really good news. The issue is the share price doesn't really increase a ton. And we can see this here. So here's a current look at SPYT on a chart. And you can see its former highs over there at $20. And pre-2025, you can see it was up there. Then we have the corrective measure, which obviously has hurt it from a growth standpoint, because here's SPY for the same time frame. Quite a contrast, between these two. This honestly looks just like XDTE. I mean, darn near chart identical, SPYT to XDTE. Just really, really close here. And you're going to see in total returns how close those two products are, which I was surprised about. It pays a targeted 20% dividend yield. So, and it pays once a month at the very beginning of the month, okay? So it doesn't matter, how much volatility or not volatile the market is, it's paying that 20% yield. The issue with 20%, okay, and the percentage-based yields are, this 20% is still going to be 20% if this thing, let's say, goes to $5. And a livable income between 20% at $18 versus 20% at $5 is pretty drastic. So remember that. So let's get into here. Total return, and we're going to look at a couple total return tools here. Total return max all time between SPYT, SPYI, and GPIX would probably be just like you figured. The gold standard GPIX is leading the pack. Second place is SPYI, and the laggard is SPYT, up 25% in total return, max all time. So, that's nice, right? Because the share price you saw was declining. It is negative share price, but positive total return. SPYT here for the past year, again, is lagging. So even whether it's max, like right here, or a year, you could see it's going to lag these other two products. And as time goes on, I think the lag is only going to get bigger as we go through time, because you can see here for a year, it's down 3% from GPIX. And if we go out max all time, it's down 5%. So that's always going to get bigger and bigger between the three of these. Price change for a year, it's actually negative, right? And that's a problem. Let's not kid ourselves. We're talking long hold here for retirement. That is a problem. It's down 7% for the year in share price, but its total returns, as you saw, were decent. And you could see SPYI price change is positive. GPIX price change for the past year is positive. Dividend growth, this is probably the most alarming thing I saw for the past year. It's down 4% in dividend growth. As the market is ripping, it's down 4%. Yeah, that's an issue. And that's writing on the wall, I think, going forward. But as it stands right now, let's look at these total return numbers. Against XDTE, it's actually beating XDTE if you kept all the distributions just by a hair. As you can see here, total return on SPYT is 21.58 versus 21.40 versus XDTE on total return. And you can see here when they're just like neck and neck. But SPYT is beating XDTE when you keep all the distributions. And isn't that the point of funds that pay dividends, right? SPYT versus GPIX, and this is, what you would expect from looking at the other, metrics we looked at. GPIX is up 3% over SPYT if you kept all the distributions, and you can see that clearly here in the chart right there. And you've actually made more. Dividends collected per share, 6.53 for GPIX versus 6.12 for SPYT. So there's that too. That's important, I think. And then if we look here at SPYI, SPYI is beating it, as you would expect, but just by a couple percentage points if you kept all the distributions. The gap isn't as far as it is with GPIX, but again, dividends collected per share, 9.18 on SPYI versus 6.12 for SPYT. So less distributions, paying that 20%, and you're still not making more dividends per share. So that's something. But I think overall, here, XDTE, look at this. Dividends collected per share, XDTE 19.35 versus 6.12. That's 3 times the amount. On XDTE, it obviously pays weekly versus SPYT pays monthly, but yeah, there's that. So I think coupled with the dividend growth and the drawdown during a major market rally in share price and total returns lagging this year and max all time, I don't think I would buy it over the other two. And honestly, I don't know, even though it is barely edging out XDTE in total returns, I think if I had my pick, I would still go XDTE. So I would put SPYT right now in fourth place between these. But I'm going to look at some more funds. There's quite a bit more I want to look at and compare them to some of these. Compare them to GPIX and SPYT and see if any of them are worth getting for me when we correct, so I can have something for a long hold. Total returns are okay for SPYT, not great, but they're okay. I just think over time it's already telling you what's going to happen, right? You don't need to, yeah, I mean, especially this here. I don't think there's much that needs to be said. I think long term it's going to lag way more. I would rather be in SPY or GPIX personally, just because they perform better. All right, I hope you enjoy it. Talk to you later. Bye.